Welcome to the Trading Lounge and the Forex report, and starting with the US dollar index here. I need to point out two counts, and one of the things that we mentioned yesterday and previous is the 95, which is a midpoint level and carries a lot of weight, and if that became the support, then we know that the fifth wave that we're looking for has begun to the upside. Currently we're in a wave 4 here, this particular pattern, and wave 4s can get a bit complicated. So with that in mind, I need to point out that this pattern can be of two ways here. It can be an A wave to here in three waves, an A and a B and a C, and then the B wave to here in an A and a B and a C, and then a C wave to here in 5 waves, and then up from that point there. That's one possibility of looking at this. The other situation is that that we do have 5 waves coming up through here. So we could be looking at this in terms of an A, a B and a C, and then up from that point there, which would be, so just bear in mind this one here, because this will be like the Euro count but in reverse. This count here that we've been following on the hourly chart here is essentially up for wave 1 here and back for wave 2, 61.8, may not come back that far, and then up here. The main point though is that breaching the 95 here, because once that has started, then we know that we're moving further to the upside of that point there. So that's the two sort of critical points that we need to be looking for. And in terms of the euro, it would look like this here. So the more complicated version would be from the low here, it would be the A wave to here, a B wave to here, and then a C wave up to here, and then moving down. The other count, if the 95 on the US dollar index gets breached, then we would see a rally off this low here, back to maybe 114, somewhere 50-60% retracement level of this 5-wave structure down here, and then would move down from that point. So essentially you can short the low here, because we do have a nice clean 5-wave structure here. So that would have to be the end of it there for this rally here to think. In both cases we'd expect a bounce from this low here. So any movement below this here would create further bearishness. So unfortunately that's what we need to work through. We've got those two counts there, and as I mentioned earlier in the week or last week, that 95 on the US dollar index is a real catalyst for support on that 95, would be a catalyst to short the euro and other pairs and crosses that have the same sort of pattern here. The Australian dollar, we're looking at this still to the upside, but conservatively we're looking at it as an A and a B and a C, retesting the 80 here. Okay, so in terms of the pattern here, we're looking at an A wave to here, then an A and a B and a C for the B wave here, and 5 waves for the C wave here. This little move up here for wave 1 and 2 here, so it is tradable up through here. This move up here should be lazier than the A wave here, so the C wave should be lazier, like on more of an angle, and the wave A is normally sharp. Wave A and C can have some equality in terms of length. If we see this move up stronger than the A wave here, which is something, you know, then we know that we'll be looking at a third wave to the upside rather than a wave 3. Happy to turn bullish, but only if we'd got support on 80, the major trading level up here. Drilling into this wave 1 here, a little bit like this here. So we're looking at an impulse wave to the upside here, an A and a B and a C wave here, and then further to the upside there. So in terms of trading this, we can just drill in here a little bit further. Just on the 5-minute chart here, we're looking at wave 1 and 2 here. and then 5 waves up for the 3rd, the 4th, and the 5th to make wave 1 in black that we just looked at, and then the A, the B, and the C wave here. It can pull back to the 50-60% here, which is the 77.80 here. There is good support at 78, and normally wave C would equal wave C here. So look, so support on 78.20 would be a catalyst to pick up a position, and then looking to add to those positions on 78.30. Don't buy lower because it's cheaper. Markets don't work like that. So you need to buy strength and sell weakness. And we wouldn't sell weakness here because we're sitting above the closest largest number here. So that's the strategy for the Australian dollar. The pound Australian is in a well, it's in a complicated sideways correction through here. It's corrective, it's not an impulse wave. So it's still developing. It may be finished right on this low here. It does count as a possible triangle in terms of an A and a B and a C and a D and an E, but I'm not very confident with this E wave here, because the E wave's in 5 waves, and each leg in a triangle should be 3 waves. So it's probably not the right count. I'm still not sure what it is, and it doesn't matter for the time being here. We haven't made a new high above this one here, so we're expecting a correction here. It's just that it's panned out like this here, and it just simply needs more work there. Now this is 5 waves down through to here, so taking that low out there would see further lows, because we, as I mentioned, we do have 5 waves from this particular high here. So that low being taken out would be a short to further lows here. It can rally above this as well, so it might end up here and then back down again as well. But in terms of a short trade setup, we have like we'd never chase a market through a level here. We need to wait for it to retest and fail. So like this one here has moved through, that becomes a reference point here, and we could short that. So we could look at this as the reference point and shorting it from that point there with the level here. Okay, yeah, but this can rally back up, 50%, 61.8% back up through here first, but obviously 195.5 being the second strongest number, it's going to give it a bit of a fight there. But I don't really have a strategy for this particular pair at the moment. The Euro Australian is also in a bit of a tricky one as well. So in fact, I'm not quite sure exactly where we are in the count here. So I'm in a bit of a guessing game at the moment. I know that the pressure to the downside is still in play. The trend is, this trend channel is down, so pointing it in that particular direction. We do have 5 waves here. We are looking at, we're also looking at 5 waves to this point here as well. So I just want to wait. I'll probably have to wait a few more sessions for this to shapen up, but we could be in a very large triangle pattern that can be a bit complicated, a bit like this pattern here on the daily chart here. So we've moved down up here 61.8%, looking for a move further down, basically an A and a B and a C and a D and an E here. It's just a bit complicated, and I'm not quite sure where we are with this one just yet, so don't have a clear count and direction on it, so I'm just going to leave it for the time being. The Euro Yen, much the same as the Euro US dollar in terms of its rally off its lows through here. And if the US dollar index finds support on 95, then this will fail from this current high here and move down. If we do get the C wave up on the Euro US dollar, just going back over to that now, if we do get this C wave up through here, then the Euro Yen is going to be doing the same thing as well, and then we'll see that pull up to the 38.2 retracement level here. So once again, this is part of the Euro mix as well. As it stands at the moment as a correction here, correctional rally, it's possible to have a high in place here, but we certainly wouldn't short this being above 133, the top of group 1. So we've got minor group 1 here, subgroup 1 here, 3 is always group 1, and this market is supported on that. However, we do know that the move up here is a corrective pattern and it will fail at some point, but just drilling into this little area here somewhat, we can look at this as being, let me just, this is actually a 5-wave structure here, the 1 and the 2, the 3rd wave here with 5 waves in here, the 4th wave and a 5th wave here. Then we've got an A and a B and a C wave here, sort of pulling back to the 50-60% here. So this is really a positive structure through here. Then we've got this little impulse wave up, and then we've got an ABC coming back again. So it is looking positive to the upside there. I thought I might have had that labeled, but I don't. But we can just quickly drill into this little section here. So we've got this A, B, and C back here, this sharp impulse wave up here, and 3 waves back here again. So we could say the next time around that we get support on 134.30, the top of group 1 of 134, should spark a bit of interest, with the view of adding perhaps on 30, 40, and definitely 50 here, and then that would take us to the upside from that point there. Okay, so let's just say at this point long on 134.50 on tested support. The pound yen, we'd been looking at tracking 5 waves to the upside here, and we've got 3 waves so far. So we've got the 1 and the 2, and then 5 waves up here for the 3rd wave, and we were noting the top and last session, and we're looking for wave 4 to pull back. We do need to be careful, however, because in reality, as always, we have 3 waves up, and 3 waves up after a move down through here would be a corrective rally. So we need to be mindful, and it can fail from that point there, but we are looking for this 4th wave here, and then the 5th wave up through to here, and then the larger A, B, and C at this point here. So just drilling in here for a moment, we've got the A wave, wave 1 to here, sorry, the wave 2 to here, and we're tracking 5 waves up here yesterday for this top here, and now we're looking for wave 4 to pull back. We don't want to see wave 4 cross into the price territory of wave 1 there. Then it's got overlapping wave structures that it does occur, that does break one of the 3 Elliott rules, the weakest one when we're working with derivatives. That's the one that gets broken the most, and you need to take that with a pinch of salt. But technically it should stay above there, and we should see this move up here. Now, I just want to drill in and have a look at this correction here. First of all, wave 4s can get complicated. Secondly, is that we'd always expect them to break the trend line here. That's what wave 4s do. That's good to know that. It's never the failure of a trend, it's just what wave 4s do. But drilling into that wave 4 here, I'm just going to drill in here again. Obviously, there's going to be good support at the 180 here. Now, from wave 3 here down to wave 4 here, just need to study this a little bit, and we've got wave 1 here, wave 2 here, nice 3rd wave here, nice 4th wave here, and wave 5 moving down here. Now wave 5 is going to be roughly the same length as wave 1 here, because extension was in wave 3. Now if we don't get this wave 5 making a new low here, okay, if that's not the case, put that on there properly, if that's not the case and this market for some reason moves up through here, then this wave 4 would be completed here, and we would be looking at this as the A wave here, the B wave here, and the C wave to here for wave 4. Now if we get 5 waves here, this is where it gets a bit tricky. If this moves down here and makes a new low here, right, that means that we have 5 waves down here. That means that we'd get a counter trend in 3 waves, and then we'd get another 5 waves down, and that would complete the wave 4 at that stage. So it's quite critical what occurs at this point here. So if you're looking to go long, we don't make a new low here, and you're looking to go long, then you need to be sort of long above, say, this high here, or find the balance point between that that high and whatever the low is, and find, you know, the central part to that corrective pattern, which would be in there, right on the highs and lows in here, it fits in. So that as support would be the catalyst to the upside there. So a bit tricky working through wave 4, but that's how I see it. Alrighty, thanks for tuning in. Cheers.